to DeFi, Degens, Drip, and Farm for Poverty, where on this channel, our vision is to empower the impoverished by helping you find financial freedom through crypto assets. Please subscribe and leave a comment and a thumbs up. Hey guys, welcome back to DeFi, Degens, Drip, and Farm for Poverty. So today I'm going to be diving into a little bit of comparison, I guess. I've done this before with a couple of altcoins like SHIB, and today I'm going to be talking specifically more so about XRP, only because I looked at my channel analytics and saw that a lot of people are searching for XRP related information. And I'm not going to be talking about XRP like what it is specifically, but more so how I am comparing it to your opportunities with Drip. So for those of you not familiar with XRP, so if you've been here just for my Drip content, the XRP token itself actually is more of a coin, and it's actually one of the few that could be classified as a cryptocurrency because its original design was, as it says here, designed to replace the SWIFT system. So if you're not familiar with SWIFT, you use it and don't even know it. So SWIFT is the architecture and technology that allows banks to communicate and transfer funds from one bank to another. So that's the trusted system that we've had, for about 100 years or so. And XRP, or more specifically Ripple, the company, created XRP, the cryptocurrency, to replace that. And they have been in the news ever since and currently under investigation by the SEC because the SEC wants to call them a security due to how those coins were actually issued and that they're centralized and yada, yada, yada. I'm not going to go into details on all of that about the XRP, but just wanted to give you guys that watch my content a heads up about what it is. And it is a very important cryptocurrency to follow because how the SEC deems it, be it a commodity or a security, will dictate other cryptocurrencies going forward. And the reason I bring that up is there's been a bill that's been pushed into discussion that actually has backing by the Democratic Party and the Republican Party in the U.S. This is more U.S. based, but as you guys know that are international as well, how the U.S. swings also starts to influence the global market because currently the U.S. dollar is the global reserve currency. So I'm kind of going on a segue, but it'll make sense shortly. So why SEC and the commodities regulation and securities is important is because it will basically dictate what kind of regulation comes into the system regarding cryptocurrencies. So there was a bill on June 6th. It had already been leaked previously, but it's been pushed into like voting or at least to get more eyes on it. And they go into details on what's a security, what's a commodity, and all this other stuff like that. So that all ties back into Ripple because maybe they're waiting for some validation from the SEC on how the SEC views Ripple and the XRP coin, and then this can push towards legislation, and legislation means voting, and then voting means regulation in the cryptocurrency space. So what does that all have to do with Drip? Good question. So I, just like a lot of other people in crypto, DCA into a lot of these top coins. So I wanted to show you that whenever you're doing these coins or tokens, some of them are tokens, some of them are coins, it's not all sunshine and rainbows. So like you're DCAing into them because you're hoping that over time their value will increase from the original purchase price that you got, and then you'll be able to sell some and take profits. So you're hoping for 5x, 10x, 1000x, and you sell a few of them, and then many of them will be here for the long haul. That's why I started with XRP, because this is meant to replace the SWIFT system and actually be a currency, so it could become a global currency that could be traded, like not the reserve currency, but just a global one that you could utilize across multiple borders. So, but the point with all this is that in order to actually see profits on any of these kinds of coins or tokens, you have to buy it low and then sell high. And traditionally, you would probably want to only sell pieces, taking profits as it goes up and DCAing as it goes down. So the easiest way that I found to DCA is actually using KuCoin. So KuCoin has bots where you can literally tell it how often you want it to buy an asset. So I set these top 5 up for me specifically: ETH, Sol, BNB, AVAX, and XRP. And what I'm doing on each of these is every 2 days, I invest $10. So it's just buying every 2 days. I started this in February. So it's been going on now 4 months or so. But what I want to show you is that every single one of these are down. 30%, let's see, 30% on this one to 50%. That is my average. So if we average that out, I'm down 40% across all of these top major cryptos via DCA. So XRP included. That's this one here. On XRP, I do $1 or $5 every day. Still comes out to $10 every 2 days, but I wanted to catch more of the volatility in this one. But shorts, wrap it up shortly, is that KuCoin is a great way to DCA. But the point I'm getting at with DCAing is I will not see any profits or any positive price action until my average price, which you see here, is above the current price, and then I can sell portions of it. So if we zoom in and look at the charts, you'll just see, like you'll see all these orders that have gone out at buy. So I'm not selling any of these, but this is the history that I've had. So it's gone up and gone down like the rest of the market, right? So I won't be able to make any profits on this until either the current price or the market corrects significantly above this so that I can sell some of it. I have, 1,142 of that one, 15 of this one, 1.8 of that. Corrects so that I can sell some of it, or it goes super high and I can just dump all of it. Now, how does that relate to drip? Glad you asked. Remember, with drip, you're getting 1% every day. So even though this asset, I call it an asset, it is an asset. This crypto coin, token, is down 95% from its initial all-time high and down about 80% from where I bought it. So it's down lower than these. I'm actually at a break even if I were to start selling right about now. Break even or a slight loss. But remember, I can't sell all of it at once, so that will depend on the total price of drip for the remainder of these 365 days. But if I were to take this max payout here and multiply it by the current price of drip, then I would be in significant profits compared to all of these that I'm DCAing into, and I'm down. Now, granted, the difference with these, of course, is that I can sell them immediately. So if the price goes up a little above my entry price, I can sell it all. With drip, of course, I can only sell the 1% I'm getting each day. So that's a double-edged sword. It's great when the market is down. It kind of stops you from selling your whole bag and just wrecking yourself. And then it's, like I said, double-edged sword. So it's bad on the upside because maybe you want to take all your profits out. But what's common between these is all of these cryptos that I'm investing in here, I believe, are long-term plays. ETH got up to almost $4,000, and now it's down. My average buy price is $2,000. That's insane. But the current price is $1,200. I do believe long-term ETH will go way above where it was. Same for BNB and AVAX, XRP, all these things. But they're not going to actually make me have financial freedom like drip could. So if I had taken the money that I had here that I was allocating and had to put that into drip alongside what I already had, I would be in significant profits right now, actually. Because remember, you're getting paid 1% per day and you can compound that back in. So the whole point of this video is just to show comparisons on, how DCAing works and how that's a good thing. And you got to have a long-term time horizon for that. And you definitely want to look at some of the use cases of other cryptos, especially the ones that have blockchains tied to them, like ETH, the BNB, XRP. And also your short-term time horizon. I believe that's where drip is. So I say short-term because I think drip is more like a 6 month to 1 year. 6 month minimum, I think, is what you should look at. So I haven't been in 6 months, but I'm quite certain that by my 6 month mark, I will be in profits. So we're looking at August 8th. We will check back on this and see what the price of drip is and, where my dollar cost averaging, basically by hydrating, has gotten me to. I mentioned in a previous video that right now, adding up all my drip across all my accounts, my average buy-in price is about $17.78. So it's about 50% down. Sorry, I didn't mean to do that. 50% down from what it's currently being advertised at. Now the question is, how quickly can this jump back up 2x versus how quickly can this 2x? And that's for another video, but that's based on market cap. So DRIP can go up to 2x a lot faster than any of these tokens due to the market cap. There's so much more. Maybe I can show you that in this video really quickly. Let's just look at BNB. So my average buy-in price for BNB was $320. In order for BNB to double, for me to get to 600, it would have to triple its market cap so that I could be double of what I bought in. So I'm going to show you that again real quick so you understand what I'm talking about. So my average buy-in price for BNB is $340. So if I want it to double, meaning I want to be able to 2x my profit basically, that means BNB has to go to 680, right? 680 is almost 3 times more than this. It's a little less than that. But in order for that to happen, the amount of money that has to come in, it's this number here. This has to 3x as well. That is your market cap. Your market cap is the total number of tokens in circulation times the current value. So if I want this to go up to $680, let me just show you this on the calculator. I'll give you the exact numbers because I know some of you are more visual than I am. Let's go 680 divided by 239. That's 2.8. So this number, we'll call it 40 billion. So I'm just going to say this times 40. There will have to be $113 billion all of a sudden in BNB for me just to make a 2x on my investment. That is insane. Now for DRIP, that's not the case. DRIP, we can look at the market cap. We know there's 1 million, a little more than 1 million coins in circulation, but that's $9 million basically. So for DRIP to 2x, all we need is $18 million. So for this to go back to what I'm currently at, which would cause me to break even, then, well, break even, I'd still have more than 2x of what I put in because of the 1% that I've gained each day. So I'd actually be up way more than 2x with that, but just using the same logic. That only requires $9 million to flow into it. And I say only because, yes, that's a small number in the DeFi space. It's a big number for us who don't have that kind of money, but that just gives you an understanding of how this works. So the whole point of this video is, yes, you should be doing other things, and getting some of these tokens is a great long-term play. But if you're looking to achieve some level of financial freedom relatively quickly, I highly suggest you look at return on investment daily platforms like DRIP. These are not paying me anything to hold, and that is shown here by my losses. Every single one of these are down. And in order for me to make my money back, like I said, it has to go above that. And if it just goes back to that price and I sell, I just break even. So that means the entire 4 or 5 months I held it, it did nothing, and then I sell out and I break even. Whereas with DRIP, I have gained that 1% every day. So I hope that makes sense for some of you guys that are sitting on the sidelines wondering what to do. You need to create a strategy that works for you, but I would suggest, not financial advice of course, having a percentage of your portfolio in these higher risk plays. Crypto in general is high risk, high reward in my opinion. And then you get into DeFi and contracts and dApps and all that, and it's just higher risk, high reward. But the risk reward ratio for DRIP, and the fact that it's been around 1 year plus already and has paid out every single day, and it has sustainably been trading sideways for quite a long time, and it's held its own even with the market volatility in the macro as well as in the micro of us being paused, just tells me that going forward, you are getting some of the best absolute prices right now. And I'm 100% certain DRIP can go lower until the farm is unpaused, but the longer this trade sideways, the closer we get to the farms coming unpaused. So you're missing a great opportunity if you're hesitating right now. So that was just a quick recap, hopefully, to help you guys understand, the power of DCAing, but what that takes in order for you to actually make profit. And that's not going to give you financial freedom by flipping any of these top 10 cryptos. Even if they 10x from here, if you don't have a bigger bag, it's not going to make a difference. So all right, that's it for this video, guys. Until next time, lift daily and achieve your impossible. See ya.